Welcome to the Smarter Money Life podcast powered by Forum Credit Union, your go-to podcast for all things personal finance, where we break down complex financial concepts into simple, actionable steps. Whether you're looking to save more, invest wisely, or plan for your future, we've got you covered. Join us each episode as we bring you expert insights, real-life stories, and practical tips to help you live a smarter money life. Hello, everyone. Welcome back to another episode of the Smarter Money Life podcast. I'm your host, Andy Mattingly. Today, we're diving into a really fun topic, the smart moves to make when you're first starting out. And in reality, there are nuggets of information here that even if you're in your late 20s or early 30s, it might make sense for your financial life. Now, the financial moves when you're first starting out has a lasting impact on your life. So joining me today is one of our Safest Life coaches, Louie Wendall. And more importantly, he's someone that's recently started this adulting process, so he has a lot of real life experiences to share with you. So we're going to dive right in. Thank you for being here, Louie.
Yeah, thank you for having me, Andy.
So why is handling your financial matters one of the most important aspects of living on your own?
Yeah, so thankfully, I lived at home for the first 18 years, went to college, had my dorm life. But now that I'm out of my dorm and having to pay for my first apartment, I've got to think about other stuff like groceries, maybe start saving for any trips that I want to do, maybe retirement. I know that's down the road, but eventually it's going to come and get to me. So handling financial matters helps me live the life that I want to live and the one that I want to live down the road. That way I'm not stressing every day.
Yeah, it's a point that you made there is this starting out and having this strong financial foundation helps you achieve your lifetime goals. It's kind of what you said. So why is that so important? Why is this foundation so important?
Yeah, so the big step is just making sure you don't fall behind. Whether or not you want to buy that car straight out of college or thinking about maybe living in that luxury apartment, maybe you don't need that stuff immediately. And you want to understand what are the essentials that you need. Is it just making sure that you can pay that rent? Is it making sure that you have your car right now? Do you need to upgrade it? So it's just making sure you start that off and build that foundation and understand what your needs are versus your wants.
Yeah, because we'd all probably like to live by ourselves after living in a dorm, but maybe you still need a roommate when you first get out of college, right?
Absolutely.
Right. Okay, so what are the 5 foundational personal strategies that you recommend that everyone thinks about? What are these 5 concepts?
Yeah, so the first one is start a savings habit. The second one is build your retirement fund. The third one is develop a realistic budget. The fourth one is add debt slowly. And then the fifth and last one is actively manage and build your credit score.
Okay, so let's dive into these. What's the best way to start a savings habit?
Yeah, so the best way to start that savings habit is building that budget. I know we're talking about that later, but that's a key start to everything. So you want to find out where your needs, where your wants, and your savings are going. And then once you do that, you can start building a goal, whether that's saving $200 every paycheck, or maybe you're moving 5% into a retirement account. It's setting that goal so that way you have something to look forward to and having that savings habit to build on.
Yeah, and I know that you're big into running marathons and all of those things. So you have to set a goal for that to train for it. You kind of have to do the same thing with building a savings habit, right?
Absolutely. It's all about starting that foundation that we talked about and then building off of that.
So when we talk about building a retirement fund, a lot of times people are like, well, how much should I be saving? So what amount of your gross pay should you be trying to save for your retirement fund?
Yeah, so usually my first recommendation to anybody is whatever your company will match. So whether or not that's a 401k, 403b, whatever your company is offering, my first step would be get that match. That's free money that you're throwing away if you're not taking advantage of that. Anything more is definitely helpful. I would say around that 10% is key category to get to once you can. Make sure that you are paying your needs. But 10%, anything more than that is going to help you out in the long run.
And now everyone always preaches this, and I believe in it, and I know you do too. But for our listeners, why is it so important to start saving early for retirement?
Yeah, so investments and anything else compounds. And so the sooner you can start saving, it allows it to grow faster with the more money in there. So that's placing it in there as soon as you can is the key strategy.
So the third one you talked about was a realistic budget. So let's talk about that. Like, why is it important? How do you do it? What are some of the challenges in putting together a realistic budget?
Yeah, so making that realistic budget, the first thing is really understanding what your needs are. This is starting with your groceries, your rent, your electric, your water, whatever things are required to come out of your paycheck every month. And then looking at what you're saving and then your wants. The wants category is the biggest thing you can do. So, do you need a DoorDash? Do you need to go to the movies every weekend? It's making sure that you are being realistic with what your life needs, whether or not that's me paying for my registration for my marathon that's coming up. It's understanding what you are going to have to spend and making sure that you do have that money.
So what was the most difficult thing for you putting together your first real budget once you got the apartment and all of that? Did you have any struggles with anything?
Yeah, so the first thing that I struggled with is when I lived at the dorm, I had a meal plan. And so I didn't have to buy groceries. And so moving into my apartment was the first thing of buying groceries. I have to buy milk. I have to buy eggs. I have to buy bread to make sandwiches or anything. So buying those groceries was the first big thing that kind of shocked me when I moved out and started living by myself.
So you started learning how much it costs for your parents to feed you, didn't you?
Yeah, absolutely.
So, one of the other things you talked about was adding debt slowly. When you first move out on your own and you get your job, you can really add debt very quickly. And if you already have student loan debt, that can be a problem. So why is it important to add it slowly? And how would you suggest people do it in a wise manner?
Yeah, so adding the debt slowly will help tremendously, especially with when you have that budget. So understanding what you can take on. So whether or not that's a car, whether or not you're taking on a mortgage, it's understanding what your budget can withstand. Adding that debt slowly will also help with your credit score. You don't want to pull your credit too many times within a time period. 2 years is how long a hard pull will stay on your credit. So you want to make sure you're monitoring that. Too many credit pulls will lower your score actually. So you want to make sure you're staying on top of that and not adding too much, as well as making sure that it is realistic within your budget.
Okay. I want to come back to credit score, but I want to go, revisit this idea of a budget. And you talked a little bit about this. How does your budget help you decide how much debt to take on?
Yeah. So when you are buying a car, you may have in your mind or look at your budget and maybe you're saving $500 every paycheck to your savings. That's additional for any adventures, anything that you want to do later on in life. And so maybe you want to take $250 of that and make that to a car. That way you can still live the life that you want to live, the entertainment, any trips you have, but also have a new car that you can drive around and have everything that you want in it. So looking at that budget, understanding what you can pay, but still live a life that you want to live is what you can gather from that budget.
Yeah, and that's so important because one of the things that I hear you saying when you talk about budget is that budget isn't about limiting how much you spend. It's really about being smart where you spend your money so that you can pay for the marathon fee or you can buy eggs and bread and milk so that you can have French toast, right?
Yeah.
And not just an egg sandwich. So I think it's important that people understand that a budgeting isn't supposed to be restrictive. And, debt, you can have a little debt if you're doing it to help, in the right manner so that you can afford it. So, one of the most important things with debt is how much it's going to cost you, which is based upon your credit score. So what are your thoughts about why it's so important to manage and build your credit score?
Managing your credit score is massive, especially when you're first starting out. Usually people don't have too high of a credit score straight out of college, straight out of high school, if you even have one. And so starting off strong, you don't want to have any derogatory marks. You don't want to have any late payments on anything. That'll help start your credit and help grow it. The best way to start growing it is maybe get a starter credit card and start building it along the way. But building that foundation will help anything grow and allow you to have a smaller payment due to your higher credit score. When people at banks or credit unions look at your credit report, they see how long you've had your credit, how long you've been making payments, and that'll allow the loaner of the money, the bank or the credit union, to give you a lower payment just because they trust you, and that's what the credit score shows, that you are a trustworthy loaner.
So sometimes what some people say is, well, I have a credit card, but my score is not going very up very high. What are some of the other ways you can improve your credit that's sort of newer now that can help your credit score by paying some other things?
Yeah, so the big first one is I have been apartment shopping recently, and so there's a new way. It's called Flex, at least the ones that they're offering, that you can pay $9 every month, and it'll allow to show on your credit. So it'll show those on-time payments and allow you to have your credit building for a fixed expense that you have every month. So that's one of the new ways. If you're struggling on another way, you can take out another loan, a smaller loan, and make sure that you're making those payments. It's just another way to grow your credit.
Yeah, and I think that's so important, Louie, what you just said there is that your credit score isn't just about loans. It's how you pay everything. And an apartment really is, you're saying that for 12 months or 14 or whatever you signed the contract for, that you're going to make those payments. And if you move out, the apartment's going to come after you for it. So it is, in a way, they're kind of lending to you. But it's also important that if you have other utility bills and if you don't pay them, you could get a judgment. If you don't pay your medical bills, you could get a judgment. So all of those things are important because if you pay those things on time, at least they're not negative, because derogatory, lasts so long. I want to kind of come back to this savings habit. We've talked, about your 5 things, but one of the things that I know that you talk to your clients a lot about is building an emergency fund. And we always like to say there's 2 kinds of emergency funds. There's the catastrophic one, and I lose my job and I need all my income. But there's the other one that's about all those little things that happen. So give us your thoughts on that, on how people can go about doing that and what should be some of their training goals to sort of get there.
Yes. So when I talk to my clients, I usually start out with a short-term goal, whether that's $500 into an emergency savings. It's just making sure that we can realistically save that money, and then eventually we'll bump that up. So we'll look longer term, we'll look 6 months, 9 months, 12 months, and set those increment goals to have that for any emergencies that may happen, whether that's pop a tire or you have a dentist appointment and they're going to have to do a root canal or something. It's making sure you have that money. But the first step is setting that short-term goal, having that success and seeing that you do achieve it. And that way you feel good and it makes you have more motivation to keep going and seeing that growth along the way.
Yeah, I don't remember the number, but I know it's over 50% of the people will have an unexpected expense of $500 or more in like every 18 months or something. So your point there is really strong about building that little small amount, because that can just throw everything off. And then you put it on your credit card, and then you're paying it off, and then your credit utilization ratio goes up and your credit score goes down. So I think that's a very strong point to make about how to get into savings. And you've weaved all 5 of these together. Any final thoughts for our listeners about this whole starting on your own, or maybe you've been living on your own for a while and struggling? Any final thoughts you'd like to share?
Yeah. Definitely the biggest recommendation I can take and give to anybody is don't be afraid to ask questions. There may be a parent that you want to go to and ask questions about what car loan or what car should I take or who should I go with for this loan. Don't be afraid to ask questions, whether that's a coworker that's been through this experience. Anybody is really welcoming to help answer those questions I've noticed along the way. So if you do have anything, don't be afraid and do ask those questions.
That's so important because, improving your knowledge on all financial matters is so important. And so as you embark on your journey of living on your own, or you would like to restart this journey on your own, remember, building a strong financial foundation is key to achieving your lifetime goals. I think Louie has given us a lot of great tips on how to do it. They're easy tips to do because they help you, manage your finances. And this is something that I want to make sure that our listeners understand. Louie has talked a lot about also enjoying your life. We're all working to enjoy what we do. And so I think if you take these 5 foundational goals and put them together, not only will you have a strong financial foundation, but you also have a lot more fun. That's all for this episode of the Smarter Money Life podcast. Thank you for joining me. I hope you found our discussion helpful and inspiring. You can find more resources on the Smarter Money Life page at forumcu.com. Remember, making smart financial decisions is a journey, and every step you take brings you closer to your financial dream. Be sure to tune in next time for more tips and insights on managing your money. Until then, stay smart and financially savvy.